Starting with the first technical session of the two-day National Tax Convention 2024 organized by the Direct Tax Committee ICAI and being hosted by the ICAI Ahmedabad branch. We have the most eminent and learned faculty for the first session, Senior Advocate CA Tushar sir, we have with us. So requesting him to please come on the dais. It's our pleasure. Please may I have a big round of applause for Senior Advocate Tushar Hemani sir, and it's my request and I invite CA Madhurya ji to please come forward and take the session ahead and introduce the learned faculty as well.
Good morning everyone. On behalf of the Chairman of the branch Sri Sunil Sangvi, Vice Chairman Neera Agrawal sir, and Chairman of the Direct Tax Committee, Managing Committee members Abhinav Malavya sir, and everyone on the dais. And on behalf of the whole Ahmedabad branch of WIRC of ICAI, I, CA Madhurya Dedi, welcome Senior Advocate Sir Tushar Hemani. Sir is a distinguished faculty in field of taxation and corporate law. He handles and represents in complex matters relating to direct, indirect taxation, corporate, commercial and fiscal laws. Before the Honorable Supreme Court, High Courts, tribunals, commissions and various appellate tribunals. Notably, he was one of the youngest to be conferred with the Senior Advocate designation by the Gujarat High Court in year 2019. He has also served as the President of Income Tax Appellate Tribunal Bar Association from year 2015 to 2017. Sir has been a regular speaker at the conferences, seminars held at various professional bodies. He has also served as a visiting faculty at various universities, colleges, management and law schools. Sir continues in contributing by way of his articles and papers in various professional journals. Today, sir is going to address us on a crucial topic of reassessment under the Income Tax Act, which affects both individuals and companies. I am sure his insights and understanding of the complexities and intricacies of this topic will help us to understand it better. Thank you. I welcome Senior Advocate Tushar Hemani sir for the address. Thank you.
Good morning, friends. We are running slightly behind the schedule. I was to start at 10:15. It's almost 10:50. So we are running 35 minutes behind the schedule. So what I'll try to do is, I'll try to extend my presentation only by 15 minutes. So I'll end by 12 o'clock. Probably my next speaker is Dhinal. If someone can send him a message that his session is going to start at 12 o'clock, then he would not have to wait. Friends, I am also skipping the pleasantries. Let us use the time that is available discussing purely the subject. After independence, after 1961, if there is one amendment which has created this kind of litigation, then unanimously my vote goes to this new amendment under section 147 and 148. In fact, right from 61, we had the same provision with some grammatical changes in the section here and there, but in substance, the provision has remained the same. It's only in 2021, when Honorable the Finance Minister presented the budget, and in the finance bill, while she was delivering the finance bill on the floor of the parliament, her speech, I have reproduced the relevant part, that in order to bring in certainty, these new provisions are brought into the statute book. But nobody realized that this amendment would give rise to so much of litigation. And frankly speaking, instead of certainty, there is now a lot of uncertainty which has now been brought into the life of each and every one of us. As a SSC, I do not know how and in what manner my case is going to be picked up for reassessment. because the settled norms, the settled law has now been thrown into the basket. We have a new set of provision where the SSEs, the practitioners, both are completely at a loss as to how to interpret these new provisions, coupled with the fact that the law enforcing agencies, namely the income tax department and the justice delivery system, namely the tribunal and the high courts and supreme courts, there also there is no clarity. Because of all these uncertain factors, there is a complete chaos which has given rise to more than 1 lakh cases which are now pending before various forums. And I'm told that every month there are thousands of new notices which are now being issued under the new provisions. Because now the fundamental difference between the old provision and the new provision is, under the old provision, there was a reason to believe which was required to be recorded by the assessing authority, whereas the new provision is completely information driven. So the moment you have some information, the reopening as a matter of course and by no application of mind takes place. The moment there is an audit objection, reopening. The moment there is an information under 135A, reopening. The moment there is any deviation, namely the difference between the figures as per 26AS and the actual return of income, that is considered as falling within the risk management strategy of CBDT, and there is a reopening. So the human intervention has gone out of the equation. It's only now the whole thing is information driven, and there are criteria to that effect. In a short while from now, we'll learn all those criteria and try to decipher as to under what circumstances A, reopening takes place, and B, if it takes place, how and in what manner we have to deal with that situation. The reason why I have reproduced this speech is, Honorable the Finance Minister has stated on the floor of the Parliament that in order to bring in certainty, these provisions are brought into the statute book. So whenever there is any doubt as regards the interpretation of the new provision, this has to be kept in mind, because way back Supreme Court in KP Varghese case said that whenever there is any doubt as regards the interpretation, one of the tools of interpretation is to look into the speech of Honorable the Finance Minister so as to bring out what were the objects behind introduction of the new section. These are the objects that in order to bring in certainty in the minds of the taxpayer, we are bringing in the new provisions. And only in case of serious frauds and where the escapement is in excess of 50 lakhs of rupees, reopening beyond a period of 3 years will take place. So therefore, we have to keep this in mind whenever we are trying to interpret the provision, and whenever there is any doubt or there are multiple interpretation giving rise to adoption of one of the probable situations, we have to keep in mind that the intention is to reduce uncertainty, and therefore that has to be kept in mind. Now look at the section. Before I go to the step-by-step guide as regards what is it that is required to be done at each step of the way, let us look at the scheme of the Act and try to broadly understand that in what way the new scheme is now introduced into the statute book. If you look at the wordings, if any income chargeable to tax in the case of an SSE has escaped assessment, for any assessment here, the assessing officer may, subject to the provisions of section 148 to 153, assess or reassess such income. So what is it that stands out? If you look at the old and the new, look at the old and the new section minutely. What is it that is now changing? Earlier portion is the old portion. Assessing officer is now not there in the equation at all. If the assessing officer, now assessing officer is not there because I have stated earlier that this is an information driven reopening process. Therefore the human intervention, namely the assessing officer who is a living human being, he is taken out. So he is no more there in the equation. Has reason to believe Now, reason to believe you will not find anywhere there. And the impact thereof we'll try to understand. Look, what is reason to believe? Reason to believe is basically a belief, individual belief. And as we heard the earlier predecessor speaker, Mr. Chavan said that he believes that chartered accountant is the best profession. And he gave reasons for that. So those were the reasons. And his belief is chartered accountants are the best professionals. That is reason to believe. It may vary from person to person. If you ask some SSC who has suffered because of some mistake of a chartered accountant, he might have a reason to believe that chartered accountants are the worst professionals. And therefore, those beliefs, they change from person to person. What is important is that what are the grounds for reaching to that belief? The grounds, Mr. Chavan has very well discussed that these are the grounds: examination system, the robust training, all those grounds. Now, those are the grounds based on which one reaches to a belief. That belief may change from person to person, and therefore there is always an element of subjectivity. On the same set of grounds, I may not reach to the same conclusion. And therefore, to that extent, there was always a subjectivity in the approach of individual assessing officers. There is, in the good old days also, we used to challenge those beliefs, that this belief is not correct. And grounds 1 to 5, which Mr. Chavan discussed, I would go before the court of law and tell the judge that, sir, based on these grounds 1 to 5, there is only one outcome which is possible, and that is the outcome of declaration chartered accountant to be the best professional. Therefore, what I would argue is that there is an existence of grounds. Those grounds are hardcore realities. And based on those grounds, there is a process of reaching to some belief. I only have to, courts would only hear me as regards existence of those grounds. Court would not look into the sufficiency of those grounds. That whether it is sufficient to reach to this conclusion, court will not entertain me. However, court would certainly find out that these grounds are there or no. If I can demonstrate that, sir, the examination system which he talked about is not there at all. Now we have a selection process whereby there is no examination. A random person is given a degree. Then court would be with me that yes, you are right. There are no grounds for reaching to the conclusion that the CAs are the best professionals. And therefore, the aspect of sufficiency of the grounds. Now, all this subjective process based on some objective criteria and that subjectivity is now taken out of the equation. Government now, Parliament now wants to restrict itself to the hardcore fact of escapement. No belief. Therefore, you look at the language of the new section, that any income chargeable to tax in case of an SSC has escape assessment. There is no question of any belief. It's only that income chargeable to tax for any assessment year has escape assessment. Now, what is the meaning of escape? We all know that something which ought to have been brought to the tax, if that is not taxed according to the scheme of the Act, then that is the income which is presumed to have escaped the assessment process. And therefore, income chargeable to tax having escaped the assessment is now the new ground. All these terms, I'll in a short while from now, I'll take you to the entire scheme of the Act to demonstrate that all these terms are defined. However, there are certain views which are, as regards the interpretation, there are different views, and we will discuss all those views. But what is at this stage is important to notice is that the reason to believe is taken out. Then the obvious question is that is it good or bad for an SSC? The answer is there is nothing good or bad for an SSC. But if I look at it objectively, if I have to analyze these two schemes, and if somebody puts a question to me that, sir, according to you, which scheme is better? I would certainly say that the newer scheme is better insofar as the implementation part is concerned. Two reasons. One is the subjectivity is now taken out because I am afraid of subjectivity, and therefore that is taken out. And the second reason is that when I compare the aspect of belief as regards the actual escapement, I'm always better off if someone has to establish the actual escapement. Belief, as I indicated earlier, is something which can never be questioned in the true sense. And therefore, the belief, if it is pitted against the actual hardcore fact of escapement, then it is always better as a litigator, as someone who is protecting the rights of the taxpayer, to argue that there is either a presence of escapement or there is an absence of escapement. Belief is something which is always in the gray area, either there, not there. But escapement is something which is always black and white. Escapement, either it is there or it is not there. You can always demonstrate that, sir, where is the escapement? You tell me that based on these facts, where is the escapement? And therefore, the obvious next question is that what is the extent of escapement which is required to be proved at the stage of initiating the proceedings? Because kindly appreciate, we are talking of the process where the reopening is being initiated. Is it that at the stage of initiation itself, escapement is required to be proved, established, and then only he can move further because it's a jurisdictional condition? Or a prima facie tentative or a preliminary belief at this stage, I'm deliberately using the word belief at this stage, so as to only express his view that there could be an escapement, because this is just an initiation stage. I don't have to prove the escapement to the hilt. I only have to indicate that there is an escapement, there is a possibility of an escapement, and I assume the jurisdiction, and when I'm actually framing the assessment, I have to prove the escapement. Now, there is something which is still in the gray area. We do not know what is the exact answer. But if you ask me, my personal view is that yes, at this stage, escapement is required to be proved at least to the extent of the grounds which are mentioned in 148 AD order. To that extent, yes, escapement is required to be proved. And I'll make good that point later on when I cover the entire scheme of the Act. Just going back to the section, the whole section is otherwise the same. Escape, if you remove assessing officer, if you remove reason to believe, then probably it's the same thing. And therefore, there is, to that extent, there are no material changes. You read the explanation. Explanation is very important, and that would throw some light as regards the intention of the legislature. What does the explanation say? Explanation says that after assumption of jurisdiction under 147, once the assessment process starts, supposing the reassessment is being carried out on the ground of some gain claimed as 1038 exempted gain in the return of income on account of some penny stock transactions. That is the ground on which reopening is initiated. However, while going through your records, assessing officer would realize that there is a expenditure which is claimed as a purchase expenditure, but that supplier is not traceable, and therefore even to that extent those purchases are not correctly claimed, and therefore he wants to disallow those purchases. The argument against the assessing officer is that, sir, this is not the ground on which you have reopened. Your reopening ground is penny stock transaction and the taxability thereof. This bogus purchase is something which is over and above the ground, and therefore you can't touch that. In order to protect the interest of the revenue, the explanation says that reopening may take place on any ground, ABC ground. Once it is validly and legally reopened, then the whole assessment is at large before the assessing officer, and he can look into the aspects which are not forming part of that 148 AD order, the recording of reason process. Even if they are not part of the reasons, I'm loosely using the term reasons because reasons are now not there in the statute book. 148 AD order, the grounds on which it is actually reopened, even if it is this ground of bogus purchase is not part of 148 AD order, then also AO can look into this. And therefore, the explanation says that even if AO has not followed the process of 148A, insofar as those bogus purchases are concerned, he can still look into this aspect of bogus purchase. So this is one indication, as I mentioned earlier, that even at the stage of initiation, to the extent the grounds, to the extent 148 AD order, the escapement is required to be proved at the initiation stage. This is one indication. Because the whole process is, according to me, that penny stock is the ground on which reopening is now proposed. Then to the extent of penny stock, escapement is required to be established. It's only when escapement is established, there is an assumption of jurisdiction. Once the assumption of jurisdiction, then he can frame the entire assessment as if it is a fresh assessment, and he can look into any aspect. This explanation supports that hypothesis, that what is the purpose of then assessment, because the argument of the revenue is that, sir, at the initiation stage, if I have to prove the entire case, if I have to establish the escapement, then what I will do while framing the assessment, I will not certainly play bhajans and all those things. So the explanation explains that at the time of actual assessment, he can look into other aspects of the matter. To the extent of ground on which reopening is proposed, that escapement is required to be established at the initiation stage only. And there are other indications embedded into the scheme. We will decipher those indications as and when we go to those sections. But explanation is one indicator that because at the time of reassessment proceedings, he can look into large number of other issues. This is in support of my hypothesis that escapement is required to be proved to the extent of 148 AD ground at the time of initiation itself. Reason to believe, we have already gone through that. There is a Supreme Court judgment which says that Parliament knows everything. Whenever there is an amendment into the scheme of the Act, and any word, phrase, term, full stop, comma, is either deleted, modified, altered, amended, or added, there is always presumed to be a thought process by the Parliament. And Parliament is supreme. We can't question that સાહેબ ભૂલ થઈ ગઈ લાગે છે, અંદર લખાઈ ગયો હશે, કંટ્રોલ ઓલ્ટર ડિલીટમાં કદાચ પેલા કોપી પેસ્ટમાં એ અંદર આવી ગયો હશે. That is not the presumption. The presumption is Parliament is supreme. Whenever they add, alter, amend, or delete anything, there is always a thought process and there is always a reason behind it. And therefore, when the word reason to believe is deleted, we have to presume that there is always a reason behind it. And the obvious reason is they want to take out now the subjectivity from the assumption of jurisdiction. And therefore, we have to, when we are interpreting the section and when the courts are interpreting the section, they have to give due weightage to deletion of this word reason to believe. There is a principle of merger, which again is something which is deleted from the statute book. Earlier, there was this principle which was embedded into the scheme of the Act. Earlier, 147, there was this third proviso which would say that you can only reopen the issues which are not taken into the appeal. So supposing, in a given example, I had stated that there is a penny stock transaction, and therefore to that extent the reopening has taken place. Supposing in that penny stock example, the SSC claimed short-term capital gain on the penny stock, offered tax at the rate of 15%. Assessing officer says that no, this is a business transaction because you are doing it in a systematic way. And therefore, I would like to tax it as a normal business income and not as a short-term capital gain. He framed the original assessment order, treating it as a business income. I carry that matter before the Commissioner appeals. First appeal is still pending. So look at the explanation. Explanation says that other than the income involving matters which are the subject matter of any appeal, reference or revision. So the issue now is, in the reopening proceedings, there was a search at some Kolkata-based operator. That operator has confessed that he has given penny stock entries to people across the country. My name appears in one of those Excel sheets. My PAN also appears in that. Therefore, now revenue is of the view that, sir, this is not even a short-term capital gain. This is nothing but unexplained cash credit under section 68, because it is nothing but your money which you gave it to Calcutta-based operator. He has returned that money to you by way of a short-term capital gain in a tainted security. So based on that tangible material, now revenue wants to take a view that this is nothing but cash credit. And therefore they have reopened. Under the old scheme, this proviso would come to my rescue, that the very issue of taxability of this short-term capital gain is a subject matter of appeal. Mind you, the language is, it must be a subject matter of appeal. It is not necessary that appeal ought to have been adjudicated upon. It ought to have been decided. Unlike 263, I have immediately given an example where the Parliament has used a different phraseology, that in 263, where identical provision of revision is there the language is which has not been considered and decided. I have highlighted that word. As against that, which are only subject matters of appeal. And therefore, to that extent, the principle of merger was pressed into service even when the appeals were not decided. The moment appeal is decided, law is well settled. Even under the civil laws, the issue is well settled. That the moment there is an appeal and appellate decision, the original order ceases to exist. It merges into the appellate order, and therefore the only order which remains in existence thereafter is the appellate order. And therefore you can't, the assessing officer being an authority lower than the commissioner appeals, he can't reopen that concluded assessment which has now merged into the order of the commissioner appeals, his higher authority. That principle of merger was applicable under the old scheme even when the appeals were merely pending by way of this proviso. Now that has gone. So under the new scheme, merger can be placed into service only when the appeals are decided, not when the appeals are pending. And therefore, to that extent, SSs are at a loss. Interesting issue, deemed escapement. These are the situations which were presumed to give rise to escapement even when normally there is no escapement, and therefore there was a deeming provision. The deeming provision under the old scheme narrated large number of scheme. Look at the bullet in the middle, TP report not filed, transfer pricing report not filed, was considered as a deemed escapement. Now which person in the right senses would reach to this conclusion that merely because you do not file the TP report, there is an escapement. TP is merely information, gathering of information in a prescribed format. There is no question of offering anything based on the TP report, and therefore merely because TP report is not filed, of course there is an adjustment in the ALP, yes, to that extent income get affected. However, non-filing of TP report itself would not result into escapement of income at all. However, there was a deeming fiction which would say that if you do not file TP report, it will be treated as a deemed escapement. Now all these deeming situations which are narrated in explanation 2 is again deleted. And therefore, one would say that, sir, now non-filing of TP report or there is an under-assessment of income because some expenditure is excessively claimed, all those situations are no more there in the statute book. Can one argue that, sir, these are the situations which would never give rise to escapement? Because if they are so simple, if they are giving rise to escapement per se, then there was no need for this explanation under the old scheme. Look, the principle of deeming fiction is whenever something is not apparent, whenever something is not visible, you have a deeming fiction which would create a fiction which compels you to read the situation in a way in which the legislature wants you to read. Therefore, there is always an element of presumption that you presume as per law, because of the operation of the fiction, you presume escapement and accordingly uphold the action of reassessment. Now that deeming fiction is also not there. With this, let us look at the 148. And 148 is now simplified to the extent that whenever we have the notice, instead of earlier 30 days, we'll now get a period of 90 days to file the return of income. However, here the explanation is where most of the action lies. Let us look at that explanation. But before that, kindly have a look at this. I have highlighted that 148 is subject to 148A. And 148A process, it precedes the issuance of notice under section 148. So in simple form, in simple language, under the old scheme, under 148 subsection 2, the assessing officer would write the reasons. He would narrate the reasons, that these are the reasons based on which I want to reopen, and that is how the assumption of jurisdiction takes place. Under the new scheme, there is a process which is now defined under 148 capital A. Look at 148 capital A. I'll come back to 148 in a short while. 148A is basically the statutory form of GK and drive shaft. The old judgment of GK and drive shaft is now converted into 148A. So now under the new scheme, the entire action would start with 148 capital A, small a proceedings. What is that? Conduct any inquiry, if required, with the prior approval of specified authority with respect to the information which suggests that the income chargeable to tax has escaped assessment. Now for the meaning of this information chargeable to tax which has escaped assessment, I'll go back short while from now. 148A starts with 148A small a inquiry or any investigation. So supposing in a given case, I gave you an example that there is a search at the Kolkata based entry operator wherein there are certain incriminating material which are found out, wherein he has confessed that he has given entry of that penny stock to people across the country for exchange of cash. Now he has some details that in Ahmedabad he has dealt with one person, namely XYZ. Then XYZ, he would say that, sir, I have received cash from that XYZ and I have dealt with that XYZ. These are the details of that XYZ. Based on those details, if banking details are available, if other such details are available, department would start the inquiry under 148A small a. They would try to determine as to who is that XYZ. They would try to access his return of income. They would find out. This is what they are supposed to do. It's not necessary that they would do this in each and every case. More often than not, we find that the moment there is an information, they'll issue notice to XYZ without carrying out any inquiry. But this is the intention behind introduction of small a. They'll try to find out who is XYZ. They'll try to access his return of income. In the return of income, they would find out, is there any claim as regards the stock market gain, namely short term or long term, which is with respect to this specific script. If at all that is there, then whether it is actually claimed as exempt or no, and once it is actually found to have been claimed as an exempt income, then they will call upon the SSE under clause B notice, that is a show cause notice. They would say that, sir, we have this information and what you have to say on this transaction or genuineness thereof, because we believe that that's a bogus transaction. And therefore the obvious next question is that opportunity of hearing, of being heard, does it mean that personal hearing is required to be given as a matter of right? Answer is no. That is not how the courts have interpreted this provision. But having said that, let me also indicate that courts across the country have taken a view, including Honorable the Gujarat High Court, that whenever the opportunity of being heard is mentioned in a statutory provision, then that opportunity of hearing must be an effective and real hearing and not merely an eyewash. So what is the meaning of that? The meaning is that if someone wants to hear you, if the authorities, they want to hear you, then they have to hear you with, in a true sense, in substance and not as a formality. For effective hearing, what is required is that whatever are the elements which are used against you, whatever are the information, whatever is the material. Supposing during the Kolkata search, there is a statement where your name specifically appears, then that's the copy of the statement. Supposing during that course of that Kolkata search at the entry operator, there is an Excel sheet which is found out wherein your name or your PAN number appears. That extract of that Excel sheet, any information, supposing at a post-search stage, there is some affidavit which is given by that entry operator, specifically naming the transactions, that these are the transactions which are bogus in nature, then that affidavit. So in short, whatever material which is used against you in that 148 AB notice, small b notice, show cause notice, that material is required to be given to you so as to elicit response from the SSC. And that is the meaning of opportunity of being heard, effective hearing, and not merely an eyewash. So personal hearing, you can always request, let them deny that request. However, it is not a matter of right at B stage. A personal hearing opportunity would be granted or not granted. Nonetheless, every material which is used against you, the authorities have to give you the material so as to elicit response from you and so as to give you an effective opportunity of hearing. That would take me to C. C is where you file the response, and clause D. Clause D say that decide on the basis of material available on record, including the reply. So therefore, here is a process of decision making. And courts have again taken a view that any decision which is without reason is a bad decision. Because here the court has interpreted the term decide, and decision is a process which is flowing from the reasons. So how do you decide that whether a person has actually decided your objections or no? That is because he has in a reasoned manner dealt with your objections. So if at all you find that your clause D order is, more often than not, what we find is A, inquiry, 1 paragraph, B, show cause notice, 2nd paragraph, 3rd paragraph, the entire response, and 4th paragraph, in view of the above, I do not find any substance in the submissions of the SSC. I believe that all these aspects can be gone into at that stage of reassessment proceedings, and at this stage I am rejecting the objections and I am confirming the reopening. Now that is not what is known as decision. Decision is, because the courts, if I can use the terminology of Supreme Court, decision is the heart of any order. The reasons are the heart of any order. Unless that heart is there in the order, there is no decision. And therefore, if you find that all these orders are without application of mind, one can challenge those orders also. However, caveat is, again, even if the order is non-speaking one, and even if you challenge that order, it is not necessary that your reopening would be cost and set aside forever. The courts would ask the authorities that you pass a reasoned order, and therefore, unless that is beneficial to you in some way, again, I would not rush to the court of law every time I find that there are no reasons in the clause D order, because ultimately I'll be set back to that stage so that authorities can once again give the reasons, and it will not make the entire reopening disappear. 148A procedure is not required to be carried out for search related cases. That is the proviso, that whenever there is any search, either in the case of the SSC or a third party search, where something which is pertaining to or relating to the SSC is found out, analogous to 153C provisions, third party search and some material of the SSC being found from that place, 148A process is not required to be carried out. There is an automatic assumption of jurisdiction, so there is no need to issue show cause, invite response, and pass the order. So also, whenever there is any information as regards 135 capital A, there is no question of following the process of 148 capital A. I have already explained you the process, and there is only one aspect, that only search cases the exemption under 148 capital A is given, not in the survey cases. I have highlighted the word survey in my slide. So whenever there is any survey, 148 capital A process is required to be followed, and that show cause, response, etc. is to be carried out. That would take me back to 148. 148 says that subject to the provisions of 148A. So we have gone through the process of 148A, clause A, inquiry, clause B, show cause, clause C, response, and clause D, order. Once that order is given to us, it will necessarily be followed with 148 notice. And that 148 notice, once you receive that, you are required to file the response within the period which is specified. It could be 90 days or any period which can be extended by the assessing officer upon your request. So what you need to do is, you need to file the return of income within that given period of time. And before that, if you feel that reopening is done without authority of law, without jurisdiction, you can always challenge that. Now, the proviso is very important, because proviso is where the action lies. Proviso says that provided that no notice under this section, that is 148, not 148A, it's 148, shall be issued unless there is an information with the assessing officer that suggests that income chargeable to tax has escaped assessment in case of an SSE for the relevant assessment year. And the SSE officer has obtained the prior approval of the approving authority. So proviso says that unless you cross two hurdles, you can't issue notice under 148. And those two conditions, preconditions are: one, there must be an information. An information, not merely an information, information suggestive of a fact that there is an escapement of income chargeable to tax. Second is, once you have that information, you go before the higher authority. So there is a counter check, and you take the approval of that higher authority. Unless you do that, you can't proceed any further. Now, what is that? The second proviso. Second proviso says that in case at the time of 148AD, 148 capital S small d order, if you have already taken the approval of the higher authority, you may not need to once again approach the higher authority, take one more approval. Therefore, approval at one of the two stages is required. Either clause D order, approval must be there. Last line must be that this order is issued after taking approval. You can always, as a matter of right, call for the approval and look into that approval, whether there is an application of mine or it is a mechanical approval. And then there is an information. Now, look at the definition of information. What is the information that is defined? Is it defined? Information on a standalone basis is not defined. However, information which is suggestive of escapement of income is defined. And therefore, for the word information, we have to rely on the dictionary meaning. For the term information that is suggestive of the fact that there is an escapement of income is defined. Look at the explanation 1 to 148. For the purpose of this section and 148A, the information with the assessing officer which suggests that the income chargeable to tax has escaped assessment means. And therefore, the phrase information which suggests that there is an escapement of income chargeable to tax itself is defined. There is no definition of information on a standalone basis. There is no definition as regards suggestions. There is no definition as regards escapement of income. The entire term is reproduced. It is not even reproduced in a quoted manner. So there is no quotation that information which suggests that income chargeable to tax has escaped assessment. There is no quotation. Therefore, we'll have to read the section in the way in which it makes more sense. And therefore, we'll have to give meaning to each and every term. Now, these are 5 situations which are contemplated. Broadly, the first situation is the most dangerous and the most widely used situation. Rest are all comparatively lesser used. The first situation is that information in case of the relevant assessment year in accordance with the risk management strategy as defined, formulated by the board from time to time. Has anyone seen this risk management strategy so far? I have not seen it. There is only one board instruction issued sometime in December 2021, wherein the whole process of calling for information from the range assessing officer based on the risk management criteria was there. However, other than that, I have not seen what is the risk management strategy. I am told that this risk management strategy is a dynamic strategy. It is not a stagnant strategy which is defined for once and then kept as it is. It's based on the data and based on the data processing on the real-time basis. CBDT keeps on redefining this risk management strategy. And therefore, every season will have its own flavor, because every time we come across those circulars that CBDT will now take up for scrutiny if you fall into any of these criteria. And those criteria, they keep on changing on a year-to-year basis. Here also, Risk management strategy, nobody knows. However, the moment you fall into that risk management strategy, you would be called upon to file the return in response to the reassessment proceedings. Your case would be picked up for reassessment proceeding. So therefore, supposing second case, audit objection. Audit objection, CNAG carries out the audit of each and every concluded file, and whenever there is any objection, the case would be considered as information which is suggestive of escapement. Third criteria is any objection where the relevant assessment here has not been made with the within the provisions of the assessing officer. I'm sorry, it is criteria number 2. Okay, that is the audit objection. Criteria number 3 is cross-border transaction, section 1991, any information which is available. Criteria 4 is 135A. In fact, 135A is the most dangerous, because 135A, if you recollect, there is no question of even following 148A process also. And the last is, whenever there is any order of the court or tribunal, pursuant to which a case which is otherwise concluded is required to be reopened, then in order to give effect to that order, there is a presumption as regards availability of information that is suggestive of escapement of income. Now, let us look at this in a slightly detailed manner. The term, the term information which is suggestive of the fact that there is an escapement of income is put together without quotation. And how do I interpret? Supposing there are 5 situations which are contemplated. All these 5 situations, there is some information. Supposing I take that there is an audit objection. As regards what? As regards non-filing of transfer pricing report. Form 3CB is not filed. Though my international transaction exceeded the particular threshold limit, there is no TP report. Therefore, there is an audit objection. Assessing officer would immediately say that, sir, now we have the information as per clause 2 that there is no TP report in the file. Therefore, I'll go to the explanation which says that any information is audit report, audit objection by the CNAG, and that information is non-availability of TP audit report on the file. Therefore, that is suggestive of the fact that there is an escapement of income, and therefore I assume jurisdiction, I reopen. Does it fulfill the criteria which is laid down by the Parliament? Or we want to interpret it in a slightly different manner? Can we not interpret that information could be under any of the 5 heads? And that information is the audit report, audit objection as regards non-availability of audit report, that is TP. That is the information. Now that information, whether it is suggestive of an escapement or no, is something which the AO has to prove. And therefore, these clauses, 5 clauses, are only the information, and the bridge from information to escapement has to be built by the assessing officer on a case-to-case basis. Or it is that information is always presumed to be suggestive of the fact that there is an escapement. Do we interpret the provisions in what manner? My humble view is that clause 1 to 5 are the situations which would give rise to information. Whether that information is suggestive of escapement or no, that is the job of the assessing officer, and that job has to be carried out on a case-to-case basis. You don't rush and reopen merely because you have the information. Where is the escapement? Merely filing or non-filing of TP report, as I have discussed earlier, would not amount to any escapement. Kindly appreciate that if my TP report, if everything is perfect, even if the TP report is filed, there is not going to be any escapement. Then where is that condition of escapement being satisfied? Unlike old law, where the deeming escapement was there, there is no such deeming fiction here. And therefore, at some stage, courts will have to interpret this term that information with the assessing officer which suggests that the income chargeable to tax has escaped assessment. So whether these 5 situations are only information or they are themselves suggestive of the fact that there is also an escapement. Information and escapement both are presumed. So my view is that it is only an information which is given to the assessing officer. Thereafter, he has to apply his mind, prove the escapement, and then only he can assume the jurisdiction. We have Supreme Court judgments in the past wherein the word information, audit objection, all this is defined. But at this stage, look, more often than not, you will find that information falling within the first clause, namely the risk management strategy formulated by CBDT from time to time. And that is something which we have not seen. So we do not know whether it is actually falling within that criteria or no. As a test case, you can someday challenge the finding of the authorities on the ground that where is that risk management strategy? Give us that risk management strategy so that we can compare whether my case falls within that strategy or no. But other than that, you will find that most of the cases are falling in that first clause, and therefore the availability of information itself is something which would be always be there. The second stage is you always question the escapement part of it in your clause B response. Whenever clause B response is elicited from the SSA, you have to take care of this situation that, sir, you only have the information. Where is that suggestion as regards escapement of income? You establish that. At some stage, if the court takes a view that, yes, it's an independent exercise, that first availability of information is only provided under explanation 1 to 148, and that escapement part is required to be established, then the submission would come to your rescue. You can raise that defense at a later stage. Okay, we can move slightly in a faster way. The concept of change of opinion. Change of opinion, many believe, and most of the revenue officers believe, that now we have a new system of reopening, which is information based. Therefore, change of opinion has no role to play. Their argument is that, sir, you look at explanation 1 to 148, there are 5 clauses. Availability of information. The moment there is an information, there is a reopening. Where is the question of change of opinion? Even if issue is already gone into the original stage, even if it has been processed, however, the moment we have the information, we have the jurisdiction. Change of opinion is now an obsolete concept. Is he right? The revenue authority is right in contending like this? My humble view is that authorities are not correct. The very fact that the power of review is not available itself is suggestive of the fact that no matter what the language of the reopening process is, unless the power of review is given to the taxing authorities, there is no question of assumption of jurisdiction whenever there is any change of opinion. Change of opinion is basically a safeguard against the arbitrary actions of the revenue authorities insofar as exercise of change of opinion, that is exercise of review powers. It's a very dangerous situation. Every time the file moves or every time there is a transfer of an officer, the new officer would come and he would say that I do not agree with the view of my predecessor and therefore I'll change my view and therefore I'll review the file, I want to reopen. Courts in the year 1989 also, there was a change in the language of the section, and there also the word reason to believe was introduced in 89. There was a challenge in the judgment of Supreme Court, Calvinator of India. Court said that this concept is not explicitly mentioned into the language, neither under old section prior to 2021 nor after 2021 the word change of opinion is mentioned anywhere in the statute book. However, that is a concept which is required to be read so as to avoid the arbitrary exercise of power by the revenue authorities. You can't merely review your own orders unless that power specifically flows from your statute book. One such power is, insofar as mistakes are apparent from record, you can review it to that limited extent of 154 mandate. Therefore, the power of change of opinion is very much available. That change of opinion argument is very much available. What about that argument that it is an information driven system, and therefore the moment we have an information, we have the jurisdiction? To answer to that is that though it is an information driven power, and in fact in the old regime also, this issue was hotly debated by the courts, that what is the nature of that information. There is something known as tangible material. Tangible material is again deliberated, decided and interpreted by the courts of law in our old regime also. Tangible material is something which is fresh in nature, which is something which has come into existence after original assessment was framed. That new development is something which can be considered as a tangible material, something which can be felt. In case you have a tangible material, then change of opinion argument cannot come to your rescue. Now, in the new regime context, what is change of opinion? Change of opinion is any information falling under those 1 to 5 clauses that is fresh in nature. Supposing my assessment order is framed in the year 2020, assessment year 17-18, assessment was framed in 2020. This penny stock transaction was scrutinized, cross confirmations were called for, inquiries took place, accepted by the assessing authority. Now in 2024, they want to reopen that transaction on the ground that now we have information. Now what is the nature of that information? If at all there is a search at the Kolkata based operator in the year 2021, then the revenue authorities are justified that yes, there is a new tangible material, namely the new source of evidence which has been unearthed because of the search operation at the premise of that operator, and therefore that is an information which is, I would call that an actionable information. So there reopening is justified. However, search is of 2017 and the statement now it has come into our possession, then one can always argue that, sir, when you framed my original assessment in 2020, you already had this information, and therefore this is not a fresh material, and therefore even if you have received the information after 2020, after framing of my information, my assessment, it can still not be considered as an actionable information, and therefore I'll still be protected by the change of opinion. And therefore, earlier regime, the criteria of change of opinion, they remain unaltered, they remain as it is, and one can still argue even in the context of new regime that there is the change of opinion is always available. The revenue authorities are not under any dimmed power to review their own orders which are already concluded in the guise of reopening. We have under the new regime, we have the judgment of the Mumbai High Court, recent judgment, taking a view that even under the new regime, change of opinion is not permissible, and therefore reopening, where the issues have been gone into at the original stage, cannot be revisited in the guise of reopening. (148) AD is the stage where the assessees will have to decide whether they want to approach the High Court by way of filing a writ petition and stay the proceedings at that stage. Courts have taken a view, more particularly Gujarat High Court has taken a view, that once the show cause notices are issued and once you surrender to the jurisdiction of the assessing authority, after 148 AD order and 142(1) notices are issued, you file the responses. At that stage, you may not approach the High Court because there you have already given your consent to take part in the reassessment proceedings, and by that manner, indirectly, you have given your consent to the jurisdiction, exercise of the jurisdiction by the assessing authority. Therefore, the appropriate stage to challenge the notice is at the stage when 148 AD order is passed and 148 notice is issued upon the assessee. Immediately within a period of 3 months before you are required to file the return of income, one should ideally approach the High Court. Then comes the limitation aspect of it. Limitation is something which is very, very interesting. And there are a large number of conditions. Up to 3 years, no condition except the condition of escapement. There has to be an escapement. And unless that escapement is established, there is no question of any reassessment. Between 3 and 10 years, there are conditions. So if at all reopening is taking place after the end of the relevant assessment year, within a period of 3 years, no condition, all they need to do is issue notice, pointing out the escapement, elicit response, and then they assume the jurisdiction. between 3 to 10 years, clause B, there are a large number of conditions. That first condition is the assessing officer must have in his possession books of accounts or other documents or evidence. So 3 things: books of accounts, documents or evidence in his possession. So he must be having the possession over these 3 documents. That those 3 documents, they must reveal. So the process of revelation is something which is hitherto hidden. Revelation is something which is otherwise not visible. Now you have come to know. So something which is already revealed, something which was already known to the assessing authority, cannot be treated as revealed. So 3 documents, books of accounts, the books of accounts, other documents and evidence. 3 documents must reveal. Revelation is something which is fresh. That income chargeable to tax represented in the form of what? In the form of asset. Again, defined. There are 7 classes of asset: loans, advances, shares, securities, land and properties, and share securities. So there are 7 classes of asset which are defined. Expenditure in respect of, kindly mark these words, expenditure in respect of a transaction in relation to an event or occasion. So do I restrict the scope of expenditure only with respect to a transaction or in relation to an event or occasion? Expenditure in respect to a transaction or in relation to an event or occasion has a different meaning. And therefore I am raising this question, that any expenditure or expenditure only with respect to a transaction in relation to an event or occasion is something which is again hotly debated. Third is entry or entries in the books of accounts. So any entry or entries in the books of accounts would also include a penny stock entry, bogus loan entries, all those loan entries, bogus expenditure, anything and everything which is duly forming part of my books of accounts is covered under the entry or entries in the books of accounts. Which has escape assessment, that escapement must be 50 lakhs or above. So that escapement has to be in the excess of 50 lakhs or above, then only one can do that. Therefore, and the proviso also says that what is it that the first proviso tries to establish. The first proviso is very interesting, and that is again a matter which is hotly debated across the country, even before the Supreme Court. The new regime has a larger period of reopening. Under the old regime, you would find 149(1), it's up to 4 years, the conditions, beyond 4 up to 6 years, 1 lakh above escapement, and up to 16 years, only black money, foreign assets, etc. Broadly, there were only 2 slabs, up to 4 years, 1 slab, and up to 6 years, 2nd slab. So the maximum reopening was taking place for normal SSs who are residents of India and does not have any foreign assets, is up to a period of 6 years. Under the new regime, mind you, Honorable the FM said that this is in order to bring in certainty and cut down the time. They say that now we can go back up to 10 years. So there are 4 additional years which are now accessible with the revenue authorities, which were hitherto not available with the revenue authorities. So when the law was introduced on 1st April 2021, assessment year 2021 was already over. So up to assessment year 2021, had the old regime continued, then they could have gone back only up to 15-16. That is 6 years backward. However, now from 1st April, they can go back 10 years. So 1st April 21, 10 years backward, and that would be 11-12. So they can go back up to 4 more years under the new regime because there is an amendment. And therefore, in order to protect the interest of the SSCs, they say that the proviso says that you can reopen only if it is permissible to be reopened under the old regime. And therefore, to the extent the years which have become time barred under the old regime, they cannot be reopened now under the new regime. And therefore, 4 years which were time barred, namely year 7, 8, 9 and 10, going backwards from 6 to, that is 7 to 10 years, those years were protected under the first proviso. That is something which was taken as a vested right of an SSE, and that is something which is sought to be now protected. So therefore, when you look at the scheme, you would find that whenever proviso says that provided that no notice under section 148 shall be issued at any time, in the case of a relevant assessment beginning on or before 1st April 2021, if the notice under 148 or 153A(c) could not have been issued at that time, so you pick up at any time and at that time and try to correlate them. And therefore, if I have to apply the provisions today, let's say today we are in assessment year 24-25. We are in the month of June 24. Therefore, we are in the assessment year 24-25. Now, I want to reopen the assessment of, let's say, 2020-21. That is the last year which is protected under the old regime. 2021 has a period of 6 years, because that is the period during which the reopening could have taken place. Today, if the revenue wants to reopen, they would find out that whether it is falling within a period of 6 years. Answer is yes, it is falling within a period of 6 years. Therefore, at that time, today, that is this time, they can issue reopening notice for assessment of 2021. Try to go back 2 years earlier. Supposing it is the assessment year which is sought to be reopened now is 17-18. Now 17-18, I would say that 6 years of 17-18 gets over on 31st March 2024. Because 18 plus 6 years. You have to count end of the assessment year, 6 years. 31st March 2021, the 6 years are over. We are in the month of June today, 24. Supposing today assessing officer wants to reopen 17-18. Can he do that? Answer is no, he can't do that because of the proviso. Proviso says that no notice under 148. We are testing the hypothesis, we are testing the interpretation. Under 148 shall be issued at any time in case of the relevant assessment year beginning on or before 1st April 2021. So relevant assessment year 17-18 beginning on or before 2021. If the notice under 148, I am skipping the rest of the words, could not have been issued at that time. So today, could it, the 17-18, could it have been issued under the old regime? The answer is no, because 6 years are already over on 31st March 2024. And therefore, this proviso is to protect that right of an SSE. And therefore, whenever you are called upon to use this proviso, count like this, that whether under the old regime, end of the assessment year, add 6 years and see if the assessment year is falling prior to 2021, 31st March, the 1st April 2021, and if that end of the assessment year plus 6 years have already elapsed, then the revenue does not have any right to reopen. However, if you look at this in a slightly minutely, then you would realize that there is a second proviso which says that insofar as search related assessments are concerned, if the search is prior to March 21, then 153C proceedings. If it is after 21, then the new regime, because new regime now has combined both, unlike the old regime where search proceedings were treated separately. Under the new regime, now everything is under a universal 147 proviso. I have already taken you to the fact that search and seizure cases, no 148 capital A process is required to be carried out. And therefore, the moment there is a search, there is presumed to be an information which is available with the assessing authority, and then all your assessments would be reopened. However, search is after 21, only 147. If it is prior to 21, then 153C. If it is a third party search, even if it's your search, in any case it is 153A, and that would have been over by now. What is interesting is that 153A and C is inserted by the Parliament after the proviso was inserted. Originally, they inserted the proviso only considering 148 and 149 proceedings. First proviso, they also inserted 153C and 153A. So the protection is that if under the old search provisions, if something could have been reopened, only those years would be covered under the new regime, and those years which could not have been reopened under the old provisions of search and seizure, you cannot do it under the new law. So therefore the argument remains the same. But what is interesting is this, that search related cases, if you recollect, under the old regime, it was known as relevant assessment year. Relevant assessment year where assessment preceding the search, namely 7th, 8th, 9th and 10th assessment year. And there the criteria again was the same, that asset in excess of 50 lakhs, if it is found out, year 7, 8, 9, 10 could be reopened under 153A and or 153C. There the criteria only remains about the asset. So if you are a search SSE, only asset-based criteria apply for assessment year 7, 8, 9 and 10. If you are a normal SSE, then asset, expenditure and book entry, all three criteria would apply. So you are better off if you are a search SSE because only asset criteria would apply. If you are counting the days, if you are counting how the reopening example which I gave you, that's 17, 18, 6 years, 31st March 24, we are in the month of June, therefore you can't reopen that. However, while calculating that, there are certain dates, there are certain period which is required to be excluded. These are the provisos for that. So proviso says that if at all 148 AB notice is issued prior to, let's say, 31st March 2024, then the clock stops there. The moment notice is issued, because it is your time. So in the game of chess, you know that the moment you make your move, you stop the clock for your moves. So revenue has issued 148 AB notice, therefore the clock stops there. And therefore the period during which SSA is given an opportunity to file the response is required to be excluded while counting the limitation. Likewise, if at all, while framing the final assessment order, immediately prior to 148 AD order, if the time limit is less than 7 days, then automatically it gets extended up to a period of 7 days. That is the next proviso. Asset definition is there. I'm not bothering you with that. 149(1)(a) is something which is which clarifies the issue which I raised, that whether expenditure is required to be considered vis-a-vis a transaction in relation to an event or an occasion, or it is any expenditure. 1A throws some light on that interpretation, and therefore it defines what is an event or occasion and the expenditure, nature of expenditure thereof. At the beginning of the lecture, I indicated that my view is, at the stage of reopening itself, escapement is required to be established. And merely prima facie stating that expenditure, escapement has taken place is not sufficient. I said that there are embedded hidden indications in the scheme. I have already indicated one explanation to 147. The other indications are that, look at the scheme of the Act. Now that we have broadly gone through the scheme says that like an assessment, there is going to be a show cause notice. Under 148 AB, there is a show cause notice. That show cause notice would also include all the material which is used against you. So it is like a show cause notice which is issued under the normal assessment. You are called upon to file a response, detailed response, in law as well as on facts. You can defend your position. Based on that, the authorities are required to thereafter frame an order, which is a speaking order. That order again is going to be served on you. It's not an internal administrative order. That's a judicial order, which is subject to again scrutiny of the court of law. So therefore, it is nothing but an exercise of an assessment. And therefore, even before the assumption of jurisdiction, there is a small assessment, and that assessment is restricted only to the items which are mentioned in the information, clauses 1 to 5. So you have information, you issue show cause notice, you elicit response, you consider the material, pass the order. So entire assessment order has already taken place. The process of assessment is nothing but show cause and response. And therefore, to that extent, to the extent the issues which are mentioned in the notice, which are subject matter of information mentioned in explanation 1 to 148, clauses 1 to 5, at least to that extent, escapement is required to be established. The argument that, sir, if we establish the escapement now, then what we will do during the reassessment proceedings is again answered by that explanation, that you have other issues to consider when you are dealing with the reassessment proceedings. With this, friends, probably I am through, except I want to point out one judgment. Dinal has also now come, so I'll be finishing within 2-3 minutes, if Dinal permits. Arre, sir, thank you. There is one judgment of Mumbai High Court, wherein assessment year 15-16 is also held in favor of the SSAs on the ground that 15-16, when the reopening notice was exercised, at that time, I have already taken you to the proviso to 149 and explained the concept of at that time. That is explained by Bombay High Court and held in favor of the SSC. 151 sanction is one issue which is again very hotly debated across the country, and there are views in favor that 151 sanction, while counting the number of years, you don't take TOLA provisions into consideration, and if 3 years are over, you have to get the sanction from the higher authorities. 151A, reassessment notices being issued by the faceless authorities versus the jurisdictional authorities. After 29th March 2022, if at all the notices are issued by the jurisdictional assessing officer, then those notices are not valid, because after 29th March 2022, it's only the faceless regime which has the jurisdiction, and all those notices are held to be illegal and without jurisdiction. We have Telangana and Bombay High Court, both directly on the issue. Gujarat has yet to take any view on the issue, and therefore, to that extent, one would have to look into the aspect that whether the notices are issued by the jurisdictional assessing officer, and if that be so, one can straightway challenge that by raising an objection at the preliminary stage itself. With this, friends, I conclude my presentation. If at all questions, Levanas? If at all any, we can have a couple of quick questions, because I'm running short of time, and I have to hand over the dais to Dinal also. So I can invite, house is open for questions. If at all anyone wants to raise any question, I'm happy to answer. Yes, please. Right, right. Sir, my view is that you should file the return under 148. The reason is, at least in Gujarat, Bombay, the High Court takes a view that once you file the return of income, that is an acquiescence, that is surrendering to the jurisdiction of the assessing officer. Whereas in the state of Gujarat, at least, the courts are not hyper-technical. But the reason why I ask you to file the return of income is that supposing if you do not file the return of income, and if you lose before the High Court, then there is a default in not filing the return of income within the due date, and there is a prosecution, or there is a direct prosecution, and that law is very, very bad. Believe me, that law, read with the judgment of Shashi Kalas, that is Shashi Enterprise judgment of the Supreme Court, is extremely bad. The moment you miss the deadline, you are inviting prosecution. And in order to face the prosecution, it's a very treacherous and lengthy process. I would suggest that rather you file the return of income within a period of 90 days. Even if you have, unless, of course, the entire notice and its operations are stayed by the High Court, jurisdictional or other High Court, then probably there is no need to file the return of income. However, if only the final order is stayed, the proceedings to continue, no final order to be passed by the authorities, if that is the kind of relief that you have got, then my suggestion is file the return of income. Yes. Yeah. Yes. Right.
Faceless.
Right.
After some time, he got another information, let's say for other assets or
Right.
anything else.
Right.
But 147 expression is saying he is looking at the entire assessment.
Right.
So how does the second information be
Look,
handled?
if at all one assessment notice is already issued, pending that notice, he can't once again issue second notice. If at all there is no such notice which is issued, only 148 AB notices are being issued, then there is no prohibition under the law. After completion of the assessment, there is no prohibition under the law whereby he can not revisit. If he is raising the same issue which was subject matter of earlier assessment, another, then it's a professional's delight.
Sir, we can claim the exemption under section 1020
Sorry?
at the filing of the reply of the 148.
Right.
Can we claim the exemption under section 1020 for the Nagar Nigam?
You can. Your question could be that in the earlier return you haven't claimed any exemption.
Yes.
Now you want to raise a fresh claim in the return which is filed pursuant to 148 notice.
Earlier we can file the return.
Earlier you did not file the return. For the first time you are filing the return of income in response to 148. Your question is, can you ask for a particular exemption?
Yes.
Answer is yes, you can do that.
Okay, thank you.
But if you have already filed the return of income, and if you have not done it, and if in the reassessment proceedings you become wiser and you want to use it to your advantage, then the judgment of Sun Engineering, 196 ITR probably, would come in your way, where the Supreme Court has said that you can't use the reassessment proceedings for your benefit. It is only for the benefit of the revenue authorities.
Thank you.
Yes.
Hello. I have filed the return under 148. Now, after 1 week, the client comes back, say, we found some additional details of income. The return was filed by the legal heir, actually.
Right.
So now they could find some other deposits and income details. So can that 148 return be revised?
Under the provisions of law, you can't do it. Yes. The portal permits, you can do it. Otherwise, you can't do it. Okay.
Explanation. It should be 153C.
Search is prior to 21.
Search is no, after 21.
After 21. Then, of course, the new regime will come in. In fact, there is a judgment of Rajasthan High Court, a recent judgment of Rajasthan High Court, wherein this view is approved that in a case of, let me see if I can, yes, Tirupati construction, that is that, in case of search prior to 21, it's only 153C which can be invoked and not 148. Search is after 21, then of course, but then if it is going backwards by more than 6 years, then only the asset criteria would apply. So you have to examine whether the material which is used against you, only asset is the consideration or anything else is there.
So between the audit objection, till 10 years time, the objection between department and AG is not resolved. And department has objected to the objection of the AG audit.
Yes.
And still they are reopening the assessment. What is fate of these kind of cases?
The fate is you come and meet me. So, no, that was on the lighter side. But you are right. You can raise that objection. That audit party, we have series of judgment of Gujarat High Court taking a view that if the SSC is in the possession of the material which would indicate that the assessing officer has resisted the audit objection, then you have a case, because ultimately that is the belief is one of the assessing officer. However, as I indicated earlier, the issue is now going to be very interesting. Now under the new provision, the assessing officer word itself is not there. So whether assessing officer belief, it's taken out. It's only now escapement vis-a-vis an information. And therefore, can we argue that there is an information, however, that is not indicative of the escapement, because assessing officer himself is saying that there is no escapement. So that is the line of argument under the new regime. That is, there is no such judgment by the High Court, but we will soon get some judgment on the High Court on that issue. Yes.
Sir, in Bombay, Hexaware decision of Bombay High Court has said that first proviso applies, 149 ka, then 5th and 6th proviso would not apply.
Right.
So, sir, notice is issued after 31st March, like वो 7 days का recourse लेके, on 7th April. So, is it time barred or valid?
Look, I personally, to that extent, I do not agree with the Bombay High Court judgment. My personal view is that all the provisos would apply in any situation. Bombay High Court was hyper-technical when it said that only the first proviso applies, and in a situation where first proviso applies, fifth and sixth are ruled out. That is something which I don't subscribe to. But you can raise that as a defense by filing an objections that your matter is time barred, and let us see how the authorities deal with that.
Okay, thank you,
Yes.
sir.
Yes. Look, less than 50 lakhs beyond 3 years is not permissible. Statute itself is very clear. You don't need any authority for that. Even if it is falling within the Tola period where the extension etc. took place, we have the judgment of Girish Das of Delhi High Court taking a view that such an extension is not permissible. Insofar as other years are concerned, the argument is that there is a provisional assessment. Sorry, original assessment was done. Look, there is no such prohibition that original is done, there is no reassessment. In case if you can establish that the ground is already opened, there was some discussion as regards the ground on which it is now sought to be reopened. It was processed, show cause was issued, answered, then you can always say that this is nothing but change of opinion. Other than that, there is no such prohibition whereby it is barred that original assessment is done, therefore they can't reopen. No, you have to, in your objection, you have to raise that, in your clause B response, you have to raise this argument and see how they deal with this argument in clause D order. Once you received clause D order, then you will have to challenge it if at all they do not drop the proceedings. But they can't reopen without following the process of 148 capital A. So you will have to challenge that. If at all it is done without following that process, unless it is a search related case and in your satisfaction note it is mentioned, then you will have to ask for the satisfaction note and find out that on what basis it is reopened. Friends, we have already spent much time on question answers, so I would stop the question answers here. I thank all the participants for giving me this opportunity to share some of my thoughts. Thank you very much for patient listening. Jai Hind.
It is my great pleasure to extend vote of thanks on behalf of Ahmedabad branch. I would like to express our greatest gratitude to our speaker Tushar Hemani sir for their insightful presentation and for sharing their extensive knowledge on such a complex and critical topic. Your expertise has undoubtedly provided us with a deeper understanding of the problems involved in the reopening of assessment, and we are truly grateful for your time and effort. Thank you so much, sir. Next session will start in 5 minutes.